Good day, viewers. Welcome to another Market Views episode. I'm Belinda and I'm your host today. With me is Hilton and Zenzi. Welcome to the show, guys.
Thank you, Belinda.
Thank you, Belinda.
So, OK Zimbabwe, the retail giant, and Meikles recently released their trading updates. Hilton, what's your view?
It's quite interesting when OK releases their trading update at the same time as Meikles. As analysts, the first thing we do is to compare OK and TM and Pick and Pay. So as you can see from the increments there, both counters have reported an increase in volumes and sales revenue. And we can now see that OK is an increase in their volume or sales volume of about 8%, comparing that to TM for that same period for the third quarter, which is up to December 2021. You see, TM Pick and Pay reported a 32% increase. So it's quite a reflection that is every industry is getting better regarding coming from the COVID-19 pandemic. You see that TM is recovering faster, I would say, than OK, and this is quite alarming as OK has been quite a big counter, and I would say most of our fund managers have that as an investment.
Okay. Zenzi, do you have anything to add?
What's interesting coming out is actually looking at the fundamental of the business. OK has 63 shops, whereas Pick and Pay has 50 shops, but now Meikles owns 50% of that portion. But also interesting to know that Pick and Pay, they're actually doing a little bit more than what OK is doing. Pick and Pay, they refurbished the Zengeza and the Makoni branch. Also, they're also actually having a new shop by Kona Actuaries and Enterprise, which is going to come up in the next coming quarter.
Yes, we can not compare. We can compare TM and Pick and Pay as one-to-one, but in terms of counters, now we have to remember that Meikles does not only have Pick and Pay; it also has the hospitality under the group. So it reported quite good news of about a 7% increase in room occupancy for the 9 months ending 31 December, which is quite good as more people are now traveling in Zimbabwe and around the country. So we anticipate an increase in the room occupancy from now going forward, as COVID-19 is not much of an issue as it was in the period we're comparing with, which is 2020.
Okay. To add on, the monetary policy also highlighted that those in the tourism sector can now retain 100% of their forex. Zenzi, what can you say about that?
That was actually a very interesting move on the tourism now able to retain 100% of that generated revenue in foreign currency. And one of the other beneficiaries is going to be Simbisa, which is also part in the consumer staples. It's also a very consumer staple company. So Simbisa is an interesting case because now it's able to retain 100% of its revenue generated. And also interesting that Simbisa, they reported that they are going to invest 19.3 million of their operations in Zimbabwe operations, with four of those of the units that they are going to create in the coming quarter to be mobile units, which are going to be selling mobile sales for Simbisa. And it being an election year, they will actually benefit from that, since we are going to be campaigning in bed with Zarabani Day. Pick and Pay that chicken in van can travel to there. Also interesting that in the Kenyan market as well, it's going to be an election period, and during an election year, the policies are going to be devilish policies, which will tend cause the customers number to increase in the customers to increase in which are buying products from Simbisa.
Right. I think it's quite interesting to see that that Simbisa is retaining 100% of their foreign currency, which is here in Zimbabwe. We also remember that in the last weeks, the civil servants are now earning around $175 US. So this is actually good news for Simbisa. They can retain all the foreign currency, and also the major customers are now earning more foreign currency. So it's actually a good thing to see, and we expect now an increase in revenues, and at the same time an increase in value for Simbisa. So the main question that we now ask is, what does this mean to the counter? Are we now getting the counter moving to a US dollar denominated exchange, the FX, or are we now getting dividends in Simbisa our expecting dividends in Simbisa in foreign currency is their major businesses are now denominated in foreign currency and they're retaining all of these foreign currency. What as Zenz highlighted, there's more capital expenditure investments, and those just are some ways that the group is trying to dispose of this foreign currency or to keep or retain value of the foreign currency.
Yeah, also coming on to the note, Simbisa, the inbox, their local remittance is actually started in end. It has actually helped the Simbisa group to retain their change. So people are knowing whenever they're buying from Simbisa, they are now having their change funded into the inbox products. But they were having challenges is the product is deemed to be very slow with the customers.
Yes.
Thank you, gentlemen. This marks the end of our show. Thank you guys for watching. Don't forget to like and share, and don't forget to follow our handle on Twitter. It's Vincent. Thank you.